Focus now is on consumption, and where are we seeing those pockets of strength? Kalyan Jewellers is one of those companies. We're speaking with them on their numbers. Their revenue is up 37% this quarter. Operating income up 4%. Margins have decreased slightly and net profits down 3.3%. There's a one-time loss because of reduction in custom duty, and perhaps that's why. Is that the reason, Mr. Kalyanaraman? Ramesh Kalyanaraman, Executive Director at Kalyan Jewellers, with us this morning. Hi, Ramesh. Great to speak with you as always. Let's talk about your second quarter. Margins hit because of the custom duty changes?
Yeah. So if you negate the customs duty margin hit, then the PBT has grown more than revenue. Revenue you saw very strong, 39% India and 37 console. And as we speak, Q3 has also begun really strong. We look at Diwali minus 30 days, and the SSGs are very comparable to Q2.
Same store sales growth have been comparable to the to Q2 to Q3 in Q3 already compared to Q2. Ahead of the wedding season, and just one forward-looking question, of course, before we come back to your numbers, what is the kind of expectation you see? Because quite a few factors over here, gold prices have gone up. Yes, they've eased in the last few days, but generally have gone up a fair bit. Are you seeing that impacting the kind of demand?
No, that's what Q3 actually started with a very high gold price, and we were anticipating a very soft festive. But again, customer demand is strong. If you look at SSGs, Diwali minus 30 days, our SSGs are more than 20%, and momentum was very strong. And last weekend also strong, thanks to gold price again coming down for the last 1 week. And we are very optimistic for the wedding season.
Ramesh, hi, it's Amina joining in. Adjusted profit before tax has declined 3% due to depreciation and higher interest cost, I believe. Now, is this a one-off, or do you expect depreciation and interest costs to be elevated? And I ask you this in light of the asset-light model that Kalyan Jewellers is talking about.
No, so even though it is an asset-light model, the lease is taken in the name of Kalyan Jewellers, and we sublease it to the franchisee partner. That is why you see the depreciation going up. And we had two models wherein CapEx was invested by Kalyan Jewellers majorly in H1, and that also increases your depreciation. The actual interest paid has really come down because we are on a debt reduction journey. And this you see is because of that, the Ind AS treatment.
So if, Ramesh, looking ahead, I know you have plans to add 50 new stores in the second half of this financial year. What is the strategy here? Is it going to be similar to what you just mentioned, where the lease is taken under Kalyan Jewellers' name, which also then means that if you're adding 50 new stores, margins will again be compromised because depreciation will be higher?
Yeah, so our strategy will still continue to take lease in Kalyan Jewellers, and then the fit out will be now on the franchisee in the new model, because we don't want to compromise our shop address. If even the franchisee moves on, we still need the address with us, and that is why we do that. And you should look at the PBT. PBT will surely grow. That has even improved in Q2. If you negate the one-time loss of around 70 crore, it's around 4.6% versus 4.5 in Q2 of last year.
Okay, Ramesh. Good morning. I saw the commentary on the call, very strong. The clarity that I wanted, that while you observed over 20% same-store sales growth for the 30 period up to Diwali, what have been the post-Diwali numbers? Is the demand sustaining in lieu of the wedding season, or is it difficult to call that right now?
No, so I told you it's very strong even now as we speak.
It's very strong now.
Yeah, very strong. Very, yeah.
Okay, and therefore, would Q3 look stronger, you reckon, much stronger than the comparable period last time, simply because there were two festivals rolled into one in October itself, and the wedding season, as we understand, is a long and a very strong one this time around?
No, because Q2 itself was very strong because of the customs duty cut. There was a lot of demand.
Which is fine.
So you cannot expect more than Q2 numbers, but yes, I'm talking about the SSGs. But yes, if you look at last Q3, of course, it will be very strong.
No, sorry, just one clarity. One last question from mine, Ramesh. We are told that the wedding season this time around is the longest that we've seen in Indian history, lasting until May. My question is the strong Q3 and strong Q4 looking very probable right now?
It's really doable as we speak right now.
Also, one other vertical that, hasn't been significant in your mix has been the Middle East, but same-store sales have grown quite well there. 9% is from what I understand. Do you feel that going into the next couple of quarters or maybe the next year or two, the contribution of the Middle East market will only go up? And if you're growing at 9% there, I would imagine that becomes an important focus point for Kalyan Jewellers. And if yes, what will that do for your revenue in the next few quarters?
No, Middle East, even though it is growing at 9%, India is growing at 23% SSG. So, and for us, always India is a bigger market and revenue share from Middle East is less than 15%. That will always continue because India is growing faster than Middle East. But yes, we are into planning of expansion on the international markets. We are going to open our first showroom in the US in this running quarter. And more international markets are also now considered like UK, Canada, and Australia, etc. We have high franchisee inquiry also from those markets. We will surely get into those markets, but India will be the major share of revenue.
Ramesh, I'm wondering how your e-commerce business is doing with your Candere brand. Are you seeing traction pick up there?
Yeah, as we speak, it is not only an e-commerce segment. You know that we are opening physical showrooms. That vertical in India is really growing. Lightweight jewelry, Gen Z, working women, giftable. So that's really growing in India. And we are now targeting to open physical stores in Candere. We have opened we are at 46 showrooms now, and we will continue to expand the physical stores. And post we reach a comfortable number of stores, we start campaigning for the brand. And it is an omni-channel rather than only e-commerce now.
You know, Ramesh, one quick question I just want to understand, and I think this is a good sense that we will have from the industry, because what we usually see is gold prices move up, stocks like your company also run up. Little do we know what the connection and the correlation is. One thing I know that there has been higher inventory cost on back of the fluctuation in gold prices. How do you manage this, and does it have an impact on profitability? Does it disturb the equation that is there?
We don't take any gain or loss in inventory, except the customs duty, of course, which we cannot hedge. Otherwise, strong shift from unorganized to organized is what we see for the jewelry segment. That is why you might see the stock prices going for organized players, is what I think. And look at the revenue numbers, look at the SSGs for the past many quarters. And that is the reason more than the gold price. I don't think there's a connection between a gold price and the stock price movement.
We'll leave it at that, Ramesh. All the best for active next couple of quarters. Thanks for taking the time out and speaking to us today.